Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. I'm going to take a quick look at the New Zealand versus U.S. dollar as we head toward the end of the trading week and look toward the new trading week. So let's get started. I'm going to put a box around this area right here. This area represents where most of the price action has taken place in the New Zealand versus U.S. dollar. We're seeing a move to the upside. We're seeing a move to the downside. We're seeing a move to the upside. We're seeing a move down. We're seeing move outside of this range and a move back into this range. You can get the idea of what the up and down price action that we've seen over the last 7 or 8 trading days here in the New Zealand versus U.S. dollar. Now, there has been times where the price has extended outside of this trading range. More specifically, we moved above it on this day last week, and on this day at the end of last week and the beginning of this week, we had this day where the price traded outside of this red box. And each of those times that the price moved above those levels, we ultimately failed and we started to come back down. In trading here today, we moved outside of the low of this value area, but we could not sustain momentum and the price has moved back above that level. Now, technically, however, at some point, we're going to get outside of this box. That is, the price is going to move away. We're either going to go in this direction or we're going to go in this direction. And when I look at this chart and I look at the more at the recent price action, what do I see? Well, I see resistance up here and trading here today against the 100 and 200 hour moving averages. Those two moving averages are now moving sideways. Why? Because the market is going sideways. We're staying in this value area, but again, at some point, we're going to extend outside of this value area and look to move away. It doesn't stay in a single area for long. At times, it gets to a point where it's time to move away. And right now, the sellers are trying to remain in control or take control by staying below the 100 and 200 hour moving average. Yesterday, we were trying to take control of the upside, but that failed as we broke below that level. Now we're trying to see if the sellers can take control. Now, in order to take more control, we need to get outside of this area. We need to get below the 0.61128 level. If we get below that level, we'll look toward the green line in this chart. This green line represents a 200-day moving average that comes in at 0.6088. If we get below that level, it opens up the door for further selling with perhaps the 38.2% retracement of the move up from the November low. It goes back here to the November high. That level comes in at 0.6049. Those are to be the types of targets that we look for getting outside of this box. But the first thing to do is get outside of the box and push below that level. Whereas risk for traders now would be perhaps maybe the high of the swing area at 0.6125. That's really close risk. Closer or more conservative risk would be the 100 and 200 hour moving averages. Those are these two lines right here. As long as their price would remain below those levels, the sellers remain more in control, even though the price remains in the up and down value area. Get it? Got it? Good. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.